Okay, everyone. So we get this question every single week. I mean, not to say almost every single day. When is the right time for me to start a corporation or DBA and LLC, and what are the differences? So this is quite simple. We have what is called a DBA, okay, which is basically when you go to court, you pay $16. It's something extremely informal. To be honest, people wouldn't even see you seriously like that. I would not take you seriously if I'm doing business with you. So they also have the option to create an LLC with the Secretary of the State of Texas, usually, right? If you're going to be doing business in the state of Texas, do not overcomplicate things. A lot of people also have the tendency of complicating things where they can be just simple. And at the end of the day, you overwhelmed yourself with a lot of paperwork, with a lot of things, and then you forgot to do business. You forgot to go out there and sell. So let's make sure that everybody hyper focuses on their main goal. Put money in the bank account, and everything else, I guarantee you, can be fixed after that. Any problems can be fixed if you bring money to the table. So DBA and LLC. We have two types of taxes for this conversation, for the purpose of this conversation, which is the self-employment, okay, and we have also the federal taxes. In addition to this, we have also a form that I will be explaining how that works. So the way it works here is that for self-employment, we have 15.3% of your net income, okay? And in addition to that, I can say that this is for Social Security and Medicare, okay? So if you're a DBA or a single member LLC, or with a partner, and the partner happens to be the spouse, then you are obligated to pay this self-employment tax, and also you're obligated to pay the federal tax. The form that you will be filing is the 1040 Schedule C. In other words, you don't have to file a separate form. You do everything in the same tax return, and that's how things end. Okay, now for the purpose of this exercise, what I really want to show you here today is the S Corp. We're going to talk about the S Corp and why it is important to have an S Corp. When you have an S Corp, you are not obligated to pay the self-employment tax. The way you pay this, maybe in the first year, the second year, you're going to start adding what is called payroll, and here's where you're going to pay that Social Security and Medicare taxes. Okay, but you won't pay those taxes from your net income. You're gonna pay those taxes only on the reasonable compensation that you apply for yourself and the employees that you have within the organization. The other tax that you do have to pay is the federal tax. So if you notice this one right here, nothing you can do. You have to pay it. Okay, and this money goes for the federal government, for the Army, for education, for health, or whatnot. What form are we gonna fill out? We're gonna fill out the form 1120S. So let's say, for example, we have $50,000 of net profits. These $50,000 of net profits, you're never going to pay taxes at the business form. Never. It's just not going to happen. The business form is going to create a K1 for all the partners of the business. Okay. And this K1 is going to be reported again in your 1040. The 1040 is the personal tax return. Okay. So basically, you're going to centralize all of your income right here. Okay. That for banking and lending purposes, it is great. Everything is just in one form, and the bank can see, well, this person is making X amount of money. W-2s, K1s, rental income, everything all together is going to be centralized in that 1040. Okay, so why do we want to do something like this? Why do we want to create an S Corp? Okay, so the explanation is actually quite simple. Let me change the color here, and let's make this one green. So let's say, for example, we're gonna put here, we're gonna create here income, not the gross income, the net income, meaning all the income after expenses. If I sold $1 million, but I have $950,000 of expenses, then my net income is going to be $50,000. If I pay my self-employment tax based on what Gustavo just explained, which is the 15.3%, then we're looking at around $7,500, the 15.3%, and then the federal taxes, let's say it's going to be 10%. Okay, this is just for the purpose of the exercise, right? So here we're looking at paying $5,000. Now, of course, it changes, it varies if you're married, if you're single, if you have kids, if you don't have kids or whatnot. Okay, so this is the amount that you have to pay. That's why a lot of people, they have the tendency to, to play a little bit with the numbers, or do this or do that, because they don't want to pay a lot of money on taxes, and they're always going to be trapped because they cannot leave their income more than 50,000. Of course, when you go try to apply to get a house, the bank is going to say, I'm sorry, we can't approve you just don't make enough money. But you can't really leave that income too high, because you're like, well, if I leave the income higher, then I'm going to have to pay a lot of money on taxes, so you just don't want to make more money. So this is basically a trap. Okay, so when we are actually in the S corp and we have a net income, same thing, we have a net income of $50,000. Then what happens is that we are going to have to pay only that 10% of federal taxes. Beautiful, which means that we pay only $5,000. Look at this for a second. $5,000. So we're basically looking at the difference of paying $12,000 in this case, or paying only $5,000. So of course, if I ask you today, well, which option do you want to go with? Well, you want to definitely go with the S corp option, because you're going to pay less money on taxes, right? And that's what we want. So one of the great benefits of this, going back to how do we apply this on the real life? When we go to a bank and we're trying to get a loan, okay, the bank is going to look at your income. So they're going to ask for your 1040. And when they look at the 1040, if your income looks, I don't know, somewhere around $50,000, they're not going to be very happy. I mean, the chances you're going to get a loan are just very limited. And if you do get a loan, it's going to be a joke, right? So this option, it's off the picture. If we leave the income somewhere around $100,000, then okay, we're on the game. But based on the explanation that Gustavo just provided, then we're going to be paying somewhere around $10,000 in taxes. Okay, yes, I mean, we have to pay taxes. If you want to be part of the American system, if you want to be part of the American dream, if you want to be part of the financial system in America, you have to be part of the system, you have to pay taxes. Okay, there is no way around. Yeah, you can figure, ways to spend the money and report less income and this and that, whatever, but you're not going to get the loans. You don't get the loans. What it's going to happen is it's going to limit you from investments. The most common case is creating passive income. Okay, so you don't rely just on your business income, but you rely also on properties. So let's say real estate. Real estate. Okay, so in this case, let's say, for example, I'm going to buy a property, $500,000. I'm going to put a down payment. The down payment is going to be $80,000. So my loan is going to come down to be $420,000. My actual mortgage, meaning the payment mortgage, is going to be somewhere around $3,000. So yeah, it's true. Many of you that are paying rent in your business, the office or whatnot, you can actually start shopping around and start buying a property, because it means that if you've been paying at least $3,000 on rent or somewhere around that, it means that you have the capacity to buy your own property. The beautiful thing about buying your own property is the following. Let's take a quick look. The good thing is that this property, in about 5 years, you're gonna improve it, you're gonna do X, Y, or Z, is going to be valued somewhere around $750,000, right? So basically, you're building something called wealth. Okay, and as you're building wealth, next thing you know, in 10 years or whatnot, you're going to have $5 million. So that's why some people, I don't know what happened here. That's why some people, they are working on their business, right? And we have two scenarios. Okay, we have the scenario that they have their own business. Okay, you're right here, you have your own business, but the business, gives you a lifestyle. You pay your bills, you provide a meal on the table, pay for food, travel, trips, pictures, whatever. You have a nice lifestyle. That's it. You have a nice lifestyle. But if your business, for whatever reason, stops producing, or you have to shut it down, or whatever happens, the business is not there anymore, then believe me, you're going to be in a very sad picture. Okay, so this is a vicious cycle. We don't want to be part of this cycle, right? We want to have a business, okay? And we want to have a business that can give us the lifestyle, pay for bills, pay for food, pay for travel, pay for whatever, whatever basic needs we have. And then we're also using that business because we're living a good net income. So we can get loans, okay? And then we can build wealth. So by the time, if something happens to the business, it's going to get a point that you're going to have other sources of income because of the investments that you have done. And you probably have, I don't know, $15,000 coming in a month. So if something happens to the business, you work hard for 15, 20 years, something happened to the business, it's okay. You're happy. You have that passive income. And then you're like, you know what? I want to start selling my properties. It's okay. You have $5 million in properties. So you can start selling the properties and then doing other investments. So because of the business was just a transportation method for you to do something else in business, and not get into just the lifestyle vicious cycle that if something ever happens to the business, then you will be in a very difficult financial situation. Okay, so I'm gonna end my explanation here with what I just mentioned. My piece of advice, what I want you to do, if you are not an S corp, if you don't have a structured business for tax purposes, make the change today. Create your corporation today. Give us a call today. Reach out to our office. We can get that done within a week. So you are formalized by the first or second week of January, and you can start the new bank account on 2021. New year, fresh business, a good business structure, and a lot of new opportunities that you can actually be part of because of being part of the financial system in America. Do not wait. I want to think about it. I'm going to do it maybe in 2-3 years. Well, yeah, the time passes and you're just going to be part of this vicious cycle. Do not wait. Make a decision, get it done. Trust me, this is something that we do not only 1 or 2 or 3 times. We've done it hundreds of times, and it's beautiful to see how many of our clients build significant amounts of wealth. And when they go to a bank, they get lines of credit, they get regular loans, they get commercial loans, they get personal lines of credit. They have access to all this amount of money that help them make the right investments to build wealth in America. Thank you very much. And if you have any questions, please make sure to reach out to us. This is a conversation that you do not want to wait. You want to create your business, your S corp immediately. If you don't have one, just trust me on this one. Get it done. Give us a call today. Thank you very much.